Hello and welcome back everyone to this weekly update on the financial markets. Last episode for the year 2025. And yeah, we have a lot to capture because I will have an announcement at the end of the video. So stay tuned and keep watching till the end. But like usually, I want to watch with you about the price action of the S&P 500 index, US oil, gold, Bitcoin against US dollar, and some of my current watch list, some single stocks, but also metals like Palladium and so on. Let's start directly in with S&P 500 index on the weekly time frame. The S&P 500 index on the weekly time frame is in a bullish mode, printing higher highs followed by higher lows. At the moment at a new all-time high, MACD was once crossing to the downside, price holding stable above the 10-week moving average. We will see how that one ends. At the moment it looks bullish to me. On the daily time frame you can see that I was able to draw an uptrend line. That one got broken, but that's already unvalid because we have seen a higher high in the index, so we have to delete that one out. There's no nice way to draw an uptrend line on this price behavior. So we work with this sideways consolidation, or I thought here an ABC pattern. Point B got taken out. I had my first long position, got stopped out with a minimum risk. Man, I think I lost $200 on that trade. And I said, if we will see a new all-time high, so getting above this corrective move here, I will get long again. That's what happened here, risking 1% of my account balance, slightly or near below this reset, speculating on rising prices into next year. I plan to take half of my position from the table once I make my risk in profit, so take the trade risk free with that, then ride the rest higher. On the 4-hour time frame, you can see it in more detail. Here you have the support with a 200 moving average, the 4-hour downtrend line, the ABC pattern broke to the upside, corrected, retested the broken downtrend line, and then got rejected higher and printed a new all-time high. Picture perfect, to be honest, as clean as it can get, and yeah, pretty happy with the trade, even if the first attempt failed and I was too risk averse and was taking my stop loss around here, I think it was. But if we have seen a decline and a turn from an uptrend to a downtrend, I would have been pretty happy with getting out early and re-entering if we see, again, bullish price action. Next on the list, US oil. US oil starting out on a weekly time frame. You can see we have a red monthly downtrend line. That one got broken to the upside, and since then we are moving inside this weekly corrective movement. You could argue that you see here an A, B, C pattern at the moment. Once that pattern gets broken to the upside, I would get bullish again. If we drop one time frame lower to the daily time frame, you can see we are all below this weekly orange downtrend line. At the moment we have here a support zone that was holding. Secondary daily downtrend line still intact, prices below that one. If we are able to get in the upcoming days and weeks significant above that one, maybe see a retest and break the retest to the upside, that would be the first real chance for a long position in my view around that level. If price develops similar to that, we definitely have a divergence price to MACD indicator, so price is making lower lows while MACD is making higher lows. That's normally a positive or bullish divergence, and yeah, it could be an early sign for a turn in oil, but at the moment I'm not trading that one, and I will announce something on oil also at the end on the video, depending on my trading style for 2026. Yeah, that's all I have for oil at the moment. Next we have gold. Gold again in rage mode. Since we left this weekly resistance zone to the upside, we have seen price printing higher highs followed by higher lows and some sideways consolidations. We had a similar situation back here. We have seen a corrective move, some sideways price movement, all supported by the 10-week moving average, and then a break with a nice green candle to the upside. That was a moment to get long. We will see that better on the daily time frame. So the daily secondary uptrend line is still intact. If we measured the last movement from the low to the high, we have seen that we found support at the 0.382 Fibonacci retracement level around that one. Since then, printed again small movements higher and higher and higher. And once we've seen break the all-time high level to the upside, I went long again, stop loss below this uptrend line and significant price action. My plan is to sell half of my position once I make my risk in profit. I would sell 50% and take my trade with that risk-free and ride the rest higher and trade my stop loss also with the position higher. On the 4-hour time frame, you can see it in more detail. Looks nice to me. I had an attempt here, got stopped out at break even, and then re-entered at a new all-time high. Pretty similar to the S&P 500 index, to be honest. Also here I was a little bit too risk reverse and could have ridden that in more profit higher if my stop loss would have stayed below this 4-hour support zone like initially planned. That's all for gold. Next, Bitcoin. Bitcoin at the weekly time frame, we can see this one is printing still higher highs followed by higher lows so far. MACD divergence was announcing a decline that happened. We lost the weekly uptrend here in orange. On the daily time frame, we can see also daily downtrend is still intact below this significant daily support zone, now turned resistance. There's the possibility that we will see a break above that, a retest and a break of the retest to the upside. That could speak for higher prices. But I think, to be honest, that the 4-year cycle is likely over, that this is the all-time high of the cycle. And we maybe then would see from there on, after we have taken breath to the upper side, that will continue lower and print with that then a lower high as well. And then what will follow is also a lower low. That would speak, at least for the classic 4-year cycle. Timing wise, it would be fitting. At the moment, more active trading position at Bitcoin. I'm not shorting Bitcoin. I think it's too strong of an asset for that. I would be again interested in longs. If I see a nice setup, I will probably take advantage of that. But otherwise, I will just wait and see for the next bear cycle and maybe get some cheap Bitcoins lower. That's everything I have to say for Bitcoin. Next are the single stocks. I'm not starting with single stocks, but instead with Palladium. We can see we met a long-lasting weekly uptrend line. The weekly downtrend is over. We have a long-lasting bottom formation here. We had the break, the retest, and then the break of the retest to the upper side. What followed was a corrective pattern again. That one got broken as well to the upside. I went long after this ABC pattern. Point B was taking out. I got long. Stop loss was placed below the complete corrective movement. I was selling already 1/3 of the position at $1,786 per ounce in Palladium. And the price action went so far that I almost forgot to place another sell limit order for selling another 1/3 of the position. And we reached that already. We declined, and now another green candle. So I think the coming trading days, it's possible that my sell limit order gets hit. Then I would sell 50% of the current position again, scale down, and then I already moved my stop loss to my entry level. So the trade is now risk free. I definitely made $220 on the trade, and I hope to make some more in the future. there's a lot of potential left in Palladium in my view. That's all for Palladium. Let's continue with JP Morgan. JP Morgan Chase on the daily time frame, you can see nicely uptrending. We had on the all-time high territory sideways consolidation. The lows got higher and higher, and finally we have seen a break above this resistance zone on the daily time frame. That for me was the sign to get along with the position stop loss placed below the last significant low here, and a little bit of wiggle room as well, midpoint of the sideways consolidation. I'm aiming firstly for a 1-to-1 risk reward ratio. That would sell 50% of my position, take the trade risk free with that, and the rest I would let run and scale my stop loss higher. So trailing stop loss, but set manually. First scaling back would be here, taking the stop loss to my entry level, taking the risk completely away. So then I would have definitely the profit banked in that with this sell limit would get generated. That's all for JP Morgan. Next on the list, Novo Nordisk. Yeah, Novo Nordisk was a nice uptrending stock, like you can see in the past. Then we had a massive decline. We declined in total 73% to the downside. That was massive. You can see on these green flags that I was buying these for my long-term investing accounts. Finally, we have seen a break of this orange downtrend line to the upper side, and a MACD divergence that is aligning with that. Divergence means that the MACD indicator makes higher lows while the price making still lower lows. We've seen the break and the pullback, and now we pushed above this small, you can see it better on the 4-hour time frame, small resistance zone here to the upper side. Also here on the lower time frame, a nice divergence, price to MACD. I went long, stop loss below this sideways consolidation, aiming for a 1-to-1 risk reward ratio to sell 50% of my current position, taking the trade risk free, and then let the rest run, because it's a nice quality stock we have here in the pharma sector. So I think it has a great future, and yeah, I will let that one run. And I would orientate myself, my stop loss on this Davos box, sideways consolidations, pullbacks, etc. Then last but not least on the list, Lockheed Martin. Lockheed Martin on long-term chart also uptrending but volatile. Lately we have seen a pullback to this weekly uptrend line. We reversed, broke this daily downtrend to the upside, corrected again. We have seen a higher low, rejected again at this weekly uptrend line. The daily secondary downtrend line from this ABC correction was also broken. We pulled back to the 2-hour moving average at the breakout level, and we even got above this small corrective move. That was a sign for me to get long in this defense stock. Stop loss pretty close below the 2-hour moving average in this smaller pullback, risking 0.5% on this trade. The first target would be 1-to-1 risk reward ratio, so to take my profits from the table, take the trade with that risk free, and then let's see how far this stock can go to the upper side. That's all I have for my single stocks. I will continue now with the plans for next year, the results of this year, and what the future of this channel holds for you. First, a look back on this trading journey. Here the white flag marked the point where this TradingView paper account was starting, and since then the S&P 500 made in US dollars nearly 30%, 29.95% in this index. That's a pretty nice year for the S&P 500 index, and I wasn't able to beat that one this time. The first half year I was able to beat it in 2024, and then the rest of the year 2025 I wasn't able. At the moment the current equity is $124,500, so I made over 1.5 years, 24.5%. Also in US dollars, so it's measurable against the S&P 500 index. The risk was not so high. The drawdowns was lower than in the S&P 500 index. I think here we lost a bit above 20%, and in my account balance, I think it was 4 or 5% we lost during that time. So you could sleep a little bit better. Risk was controlled. Nonetheless, the target or the goal of this trading journey is to beat the S&P 500 index over the long run. That can happen. That will not function in 1 year, but over a couple of years. That should be the case. And under the year, it's also the target to beat the S&P 500 index. I'm pretty happy with the journey. I learned a lot trading this paper account together with you on YouTube. On the sidelines, I invested in certificates, knockout options, etc. On my German broker account. But I decided now to change something significantly. I would like to open up for you, with you together on YouTube, a real money account on Interactive Brokers. There I deposited already $10,000 or 10,000 euros because I'm based in Europe, so I would like to trade also in Europe. No currency exchange problems, devaluation of the dollar, etc. So I would trade also in euro, 10,000 euros, and I would like to trade them together with you, or at least show you in future my real money trades there, and document it on this YouTube channel like you are used to it already. I will also talk then in the future about things that happen with a real money account in comparison to a paper trading account. There are a couple of differences depending the margin, the leverage, etc., position size, you name it. And yeah, I hope you will stay with me on the journey, subscribe to the channel, and will watch also my future videos. I will track that account like this year with an external software, so you can see all my trades. Maybe I will also put a link into the description in future videos where you can see every time my live account and my live trades, and analyze and learn with you together trading the market like in the past 1.5 years now. I wish you all a nice vacation or a nice transition from 2025 to 2026, and I will start with that account on the 1st of January 2026, so no trades till then. And with the real money account, you can decide if you have trades open that I discussed on this YouTube channel, what you will do with them in the future. Sadly, I will not cover them anymore because I will concentrate then on the real money account and let these things run, or they don't interest me then anymore. You could also decide for yourself if you have positions open to close them. Now, in the last few trading days, I think you should be in profit if you followed me. That was every time your decision. I'm just showing you what I do, and there is no advice to follow my steps. Yeah, that's all I have for this year. I hope you enjoyed the ride and will continue the ride with me next year. Till then, bye bye.